Hey everyone, welcome back to the channel. If you're new here, I'm Paula and this channel is all about understanding the psychology of trading, breaking down what's happening in the markets and helping you stay calm and confident even when everything looks chaotic. If that sounds like your thing, make sure you hit subscribe, tap the bell icon and give this video a like so you don't miss future updates. Before we dive in, quick disclaimer, nothing I share here is financial advice. I'm not a financial advisor. This video is purely for education and discussion based on what I'm seeing and researching in the markets. All right, let's get into it. It's been one of the wildest weeks we've seen in a long time. Stocks have dropped, crypto's taken a hit, and fear has crept right back into the markets. So what's actually happened? The big headline came when the US announced 100% tariffs on Chinese tech exports. That's huge, not just politically, but economically. It reignited trade war tensions between two of the largest economies on the planet. Almost immediately, we saw a reaction. The Dow Jones plunged over 800 points, the S&P 500 and Nasdaq had their worst day since April, and the FTSE 100 closed down around 81 points, finishing roughly at 9427. Across the board, investors rushed to de-risk. Money flowed out of equities and safe havens like the US dollar and gold picked up strength. It wasn't just stocks, crypto took a heavy blow too. Bitcoin had recently just hit an all-time high, just over 125k, but as soon as the tariff announcement hit, we saw one of the biggest single-day reversals of the year. Over $19 billion was wiped off crypto's total market cap in hours, and that tells you something big. Geopolitical risk is back, and the global system is still deeply interconnected. When one domino falls, the rest start to wobble. Let's unpack why this hits so hard. Over the past year, markets have been fueled by one main story: AI and tech. Companies tied to artificial intelligence chips and automation have been driving most of the gains. But here's the catch: only a handful of massive tech names were carrying the market. And that's what we call a narrow rally. And narrow rallies are fragile. So when you combine that fragility with tariffs targeting Chinese technology, plus worries that valuations are getting overstretched, it's a recipe for fear. Even the Bank of England warned this week that the AI bubble could burst. They pointed out how speculative some valuations have become. So investors are nervous. It's not just about one tariff. It's about a bigger picture of rising perfectionism, slowing global growth, persistent inflation, and central banks that are still hesitant to cut rates. When those elements combine, it shakes confidence fast. And confidence drives the market more than data ever will. So let's zoom out. Even before this week's drama, cracks were forming beneath the surface. Inflation was proving sticky in the US. Europe's manufacturing numbers were sliding and consumer confidence in the UK was weakening again. Central banks are walking a tightrope. Cut rates too early and inflation reignites. Cut too late and you risk triggering a credit crunch. So traders are stuck in a limbo, not sure whether to lean risk on or hide in cash. And oil prices are creeping up again thanks to tensions in the Middle East and OPEC supply limits. So when you drop a trade war headline into that mix, boom, you've got the perfect trigger for volatility. You've heard me say this before, markets are emotional, not logical. When things are calm, greed takes over. People convince themselves that this time is different. They chase prices higher because everyone else is doing the same. But the moment something breaks that illusion, fear floods in. And it spreads faster than anything else. That's exactly what we saw this week. Months of complacency were suddenly replaced by panic. And remember, when markets are heavy, positioned one way, they fall even faster when sentiment slips. That's why we saw such violent moves in tech and crypto. This is where emotional discipline matters most. Not reacting impulsively, not chasing losses, just observing and staying grounded. That's what separates professionals from gamblers. Now let's look ahead. There are three main paths the market could take from here. The first one, I call it the relief rally. In this version, cooler heads prevail. The US and China start talking again, tariffs get scaled back or delayed, and central banks drop subtle hints about future rate cuts. That combo would calm nerves fast. Tech stocks would bounce back, crypto could recover strongly, and investor confidence would return, at least for a while. But the question is, would it be sustainable? If the core issues, trade friction, inflation, valuations, aren't actually fixed, then that rally might just be another lower high before another dip. Short-term optimism, long-term fragility. The second scenario, and probably the scariest one, is the policy mistake. This is where things spiral. China retaliates with its own measures, markets panic further, and central banks, instead of easing, stay hawkish because inflation flares again. That's when you get the classic correction, 10, maybe 20% off global indices. Liquidity tightens, volatility spikes, and margin calls start to roll in. Risky assets, especially speculative tech and smaller crypto projects, get hit the hardest. Money rushes to safety. Bond, gold, utilities, cash. It's painful, but those shakeouts also clear out leverage and reset the system. That's why the biggest opportunities often appear after fear peaks. The third path is less dramatic: stagnation and rotation. In this case, the world doesn't crash, but it doesn't fly either. Growth slows, policy stays cautious, and investors quietly rotate into safer or undervalued sectors. You'd see value stocks outperforming growth, energy and commodities gaining traction again, emerging markets becoming attractive because they're cheaper. Crypto in this environment would likely drift sideways. The hype cools off, builders keep building in the background. It's not exciting, but this is the kind of slow grinding market where long-term positioning matters most. While everyone's bored or distracted, the smart money prepares for the next cycle. So what can we watch right now to figure out which path we're on? First, trade updates. Any sign of compromise between the US and China is bullish. More tariffs or bans, bearish. Second, central bank language. Listen for subtle shifts. If you start hearing data-dependent or gradual easing, markets could respond positively. Third, corporate earnings, especially from big AI names. If their numbers disappoint, that could deflate the tech bubble fast. Fourth, volatility indices. Keep an eye on the VIX. If it stays elevated, expect bigger intraday swings. And finally, crypto sentiment. Watch how Bitcoin behaves at key support levels. That often tells us more about overall risk appetite than any headline. Now, let's talk about staying sane through all of this, because at the end of the day, it's not the markets that make or break traders, it's their mindset. Here are a few reminders I live by. 1. Diversify. Don't let one trade or one asset define your success. 2. Avoid over leverage. Confidence isn't the same as safety. And 3. Be aware of your emotions. When you feel that rush of fear or greed, pause. 4. Zoom out. What feels like chaos today often looks like a small blip months later. And 5. Look for opportunity in fear. Corrections are where future winners are born, but only if you stay patient enough to see them clearly. And above all, protect your mental capital. If you're exhausted, anxious, or reactive, even the best setup won't help. So where does that leave us? The easy money phase of the markets is over. We're entering a period that rewards skill, patience, and clear thinking. And if you can stay grounded while everyone else panics, that is your edge. I'll be tracking all of this closely, so make sure you're subscribed and have notifications turned on so you don't miss my next breakdown. If you found this helpful, please give me a like and tell me in the comments, do you think it's just a short-term correction or the start of something bigger? I'd love to hear your thoughts. Trade safe, stay calm, and remember, volatility isn't the enemy. It's opportunity disguised as chaos. See you in the next one. This content is for educational purposes only and does not constitute financial advice. Always do your own research before making investments or trading decisions.